Hello traders and welcome back to the Forex Geek where we dive deep into the tools that can help you make smarter trading decisions. In today's video we are going to be talking about the Keltner Channel scalping strategy, which is a powerful technique that can help you capitalize on quick price movements in the Forex market. So if you've been searching for a reliable method to identify high probability setups and execute precise trades, this strategy might be just what you need. So stick around until the end of this video to learn how to set up your charts, spot ideal entry and exit points, and manage your risk effectively using this proven approach. So without wasting any much of your time, let's get started. So first of all, we have the Keltner channel on our chart, which is the indicator you are seeing. And this indicator is a technical indicator designed to help traders identify trends, overbought and oversold conditions, and potential breakout opportunities. So it was developed by Chester Keltner and later refined by Linda Rash. This indicator is based on volatility and consists of three key components. It consists of a middle line and an upper band and a lower band. Now the middle line is typically a 20 period moving average. This is the middle line here. This upper band is the lower band. It's just a 20 period exponential moving average that tracks the average price over a set period. The upper and lower bands are calculated by adding or subtracting a multiple of the average true range. The multiple we're talking about can be set. The standard and default is the 10. The 10 setting. ATR length is 10. So either by adding or subtracting 10, which is that default multiple, from the middle line. This gives us the upper and lower band. This ATR based calculation allows the Keltner channel to expand or contract dynamically with market volatility, making it an adaptable tool for various market conditions. Now you should know the features of this Keltner channel. What are the features? The first one is dynamic support and resistance. The upper band often acts as resistance in an uptrend, while the lower band serves as support in a downtrend. You can see this is an uptrend and we have the upper band giving us this resistance. Price failing to move all the way above the Keltner channel just serves as resistance. See the same thing happening here, where price fails to just break entirely off this upper band of the Keltner channel. Have the same thing happening here. And for the lower bands, we have it. We can also use it for support. You see the channels serving as support and price failing to break below the channel. So all of these they can be used as dynamic support and resistance. The next one is breakout signals. Price breaking above the upper band may indicate bullish momentum and below the lower band may indicate bearish momentum. Looking forward to that, you can see price breaking above the upper band here, showing that we may just be bullish for the meantime, and you can see price movements all the way up after that breakout and close above the upper band. And also trend identification. Another key feature is trend identification. Now we're talking about a rising channel signals an uptrend, a falling channel indicates downtrend, and a flat channel suggests a ranging market. So that one is basically straightforward. Rising channel uptrend, falling channel downtrend, and flat market like this, ranging markets. Very easy. Now, all of these features, you can use them in the market. In ranging markets, price tends to oscillate between the upper and lower bands, providing opportunity for reversal trades. Additionally, breakout beyond the bands can signal strong momentum shifts and trend continuations. Now, we're talking about step-by-step strategy, which we are supposed to talk about. We talk about the Keltner channel scalping strategy. So we are on the 5 minutes. The first step is to set your charts the 5 minutes or the 15 minutes. And the next step after that is to add your Keltner channel indicator. Set it to your length, your exponential moving average length should be 20, multiplier should be at 2, source should be at close, and use exponential MA. Should always use exponential MA, and average true range, and the length of the ATR should be 10. and that is your default setting. After setting up your charts and setting up your Keltner channel, the next step is to identify the trend. So before entering any trade on any strategy, you need to first of all confirm the market trend using your middle line here, or you can also use external moving averages like your 50 period moving average or your 200 period moving average. And if price is consistently above the EMA, it indicates an uptrend, so you should focus on buy setups. And if price is consistently below the moving average, it indicates a downtrend, so you should focus on bearish and selling setups. So to just help us gauge that, I'm just gonna add the simple moving average and change the color to red, and I'll use the 50 period moving average here to tell the trend. I could just use 100 instead. Let me use 100. And when price is above the EMA, it shows that we are bullish. Below it shows that we are bearish. Now for the next step, wait for a pullback. Once you've identified the trend direction, you should wait for the price to pull back toward the middle line of the Keltner channel, which is the 20 period EMA. And after that, then you can look to enter your price. But before that, you should always wait first, confirm the trend, wait for price to pull back to the middle of the 20 period EMA, and this pullback serves as your signal to prepare for a potential trade in the direction of the trend. But before that, do not just enter, confirm your momentum. That's why I have my volume indicator set already. Price breaking above the moving average, and also in your channel facing to the upward direction, you should have increasing buying volume in the market. It shouldn't be low volume like this, because low volume signals uncertainty, consolidation, ranging market. But the starting of this trend here, you can see increasing volume in the market. So that's another one to confirm the momentum before buying or selling. This can help us avoid false signals in the market. So after all of this, after all these conditions are met, trend confirmation, pullback to the middle line, and momentum alignment, you can enter your trade. We have our pullback to the middle line happening here. Stop loss below our stop loss, you can place it below our Keltner channel, or you can also place it below the middle line. Either way, you can also place it below that swing low right there. And take profits can go all the way. If you target a 1:2 or a 1:3, you can also target previous uh, resistance and support levels depending on the market direction. Here we are targeting former resistance levels like this one, and we also have another one here. You could just look to lock in your profits once price gets to these levels, and this is how we're able to catch this trade. This was a scalping trade. Remember, we're on the 5 minutes, and this just took about just 2 hours for this trade to materialize and actualize. And we are in an uptrend, remember. So the first step is to confirm your trend. Are we bullish or are we bearish? You can see price moving below our 100 period moving average here. Remember, we're on the 5 minutes. The next step is to uh, wait for a pullback to the middle line. So after price crossed below this, we have a pullback to the middle line happening here. We have a pullback to the middle line here. And that pullback to the middle line also serves as a bearish engulfing candlestick pattern. Oh, this is wonderful. So just look to take our sell trade from that area, stop loss above our moving average, or you can just place stop loss above the swing high and take profits all the way down. 1:2 risk to reward ratio, remember. And you can also see price closing above price giving us this wicks below the lower band Keltner channel, signaling oversold conditions, and we may be looking for a potential pullback to the upside. All of these are just indications, and you can look to close your trades out after that. So all of these are just ways you can trade using the Keltner channel scalping strategy. I've explained for the buy example, this is for the sell example. Let me look for one more example before we call it a day. We have price moving above the moving average here. Price crosses above the moving average right here, and we have the pullback to the middle line happening here. Wonderful. So we just look to take our buy position. You can just wait for, if you want, if you're a conservative trader, you could wait for price to break structure and close above that high before you place your buy entries. Stop loss below that swing low or below the moving average. Take profits all the way. Remember, we are scalping, so we're just looking for a quick one. 1:2, 1:3. We're not looking to hold this trade for hours and hours overnight. No, just looking to just enter and get out of the trade. So that is that for scalping. We have another example here. We are talking about scalping, so there are so many opportunities. Price moving above that, price retracing to the middle line. Once here and also one here. Just need to place our buy entries. Remember, place your buy here and stop loss below the middle line. Take profit 1:2 and we're out. Very straightforward. Advise you practice this scalping strategy and only risk 1:2% of your account per trade. Scalping requires strict risk management to succeed over time. Stick to setups that meet all criteria that we've talked about in this strategy and avoid over trading during periods of low volatility or unclear trends. Alright traders, we've come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, don't forget to like, subscribe and turn on the notification bell so you never miss out on any trading tips and strategies that we're going to share in subsequent days and weeks. Thanks for watching and I'll see you in the next video.